ETF multiplier effect, where I thought that all the existing sellers of actual Bitcoin, spot Bitcoin, rather than sort of the paper IOU Bitcoins and the ETFs would do a lot better as well because of the validation and the marketing juice of the launch of the ETFs and just sort of it being safer for everyone to talk about Bitcoin. And I think that has happened in spades. We've been up a ton this year as expected. And, I really look at the ETFs as a great top of funnel for actual Bitcoin that you can take into self-custody. So that's something that I did expect to happen. Something that I did not expect to happen to the degree that it did was it becoming such a political football and a campaign issue, and something that was part of the active conversation in the election cycle. And I thought that's been really fascinating to watch from May onward, I guess, is about when that started, almost 4 months ago.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Cory Klippsten, CEO of Swan Bitcoin, takes stoke of this momentous year for Bitcoin. Klippsten talks about what's next for Bitcoin and discusses what to expect during the last 4 months of 2024 and beyond.
It does look like we are expecting a rate cut here in September, and whether that's just the Fed sort of asserting that they can still do such things and the economy is in a position to be able to handle that sort of thing is for others to break down, but it does look like we're getting one. My expectation is that will be probably the only one, so I don't think this is going to start a rate cutting cycle, and I think that we'll probably end up staying flat the rest of the year. So we will see. I do think there's been a history of once elections are in the rear view and people know what they're going to get for the next 4 years, at least to some degree, there's a bit of, okay, now I can sort of settle the bets that I've had on for the last 6 months or the last 12 months. And now I can sort of place my new ones and sort of understand what the protocol is going to be going forward. So I think that's probably net good for Bitcoin. On top of the cycles, obviously, that we've seen with bull markets in 2013, 2017, 2021, related to the Bitcoin halving, probably. Until we stop seeing cycles, I kind of have to believe in them and have to plan for them. So that's what I expect to see on the Bitcoin side. If you're kind of looking at a macro picture, it seems like presidential elections kind of coincide with money printing after somebody gets elected, no matter which party it is. And that tends to be pretty good for Bitcoin price development as well. Yeah, if I were placing an even money bet, I would say that we'll see 75K before December 31st. So another 20K up from here. But it wouldn't be a big deal if that was delayed into Q1. And, I'm certainly not saying that you need to plow all your money into Bitcoin right now, because it's definitely going up. As you know, I very much am a proponent of buying it for the long term and thinking about 5 and 10 year holding periods for this asset.
Ethereum's price is down almost 4% on September 7 and 10% in September, due to multiple headwinds for the second biggest cryptocurrency. The collective crypto drawdown on September 6 followed U.S. non-farm payrolls data, which came in at 142,000, below the forecast of 164,000. The Ethereum price decline also coincided with high Ethereum ETF outflows during the first week of September, which highlights the current lack of institutional interest in Ethereum. Grayscale Ethereum Trust was the main source of sell pressure during the first week of September, with $111 million in spot Ethereum exchange-traded funds, ETF, net outflows. As illustrated in the chart, the individual outflows on September 3 and September 4 were the largest over the past month, with $52.3 million and $4.06 million, respectively. On the other hand, positive net flow was extremely low, with Fidelity witnessing $4.9 million inflows on September 3 and BlackRock registering $4.7 million on September 7. This lack of demand possibly forced WisdomTree to withdraw its Ethereum Trust S1 registration. Meanwhile, asset manager VanEck also decided to discontinue its Ethereum futures ETF, citing factors such as performance, liquidity, assets under management, and investor interest. Ethereum has also lacked demand from retail investors over the past month. In the last 30 days, Ethereum net flow across centralized exchanges has been negative $856 million, which indicates a lack of buying pressure. Meanwhile, future traders looked at the current price action as a short opportunity this month. Since September 1, Ethereum's open interest, OI, has progressively increased by 12%, with the funding rate gradually decreasing. During the same period, Ethereum prices have fallen 10%, which means most traders were aggressively shorting Ethereum during this past week. The current OI is as high as on August 27, when Ethereum prices were around $2,500. An inverse trajectory between OI and price, coupled with a decreasing funding rate, therefore, is possibly responsible for Ethereum's latest bearish price action.
In the sentence where somebody says that correlation is currently higher than it's been is kind of all you need to know. It bounces around. So Bitcoin can trade sort of in lockstep with NASDAQ stocks for short periods of time. But in the long run, this is a secular trend that's orthogonal to what's going on in stock markets. It is affected in the short term by liquidity. But overall, what we're just seeing is the adoption of a new monetary asset that's going to take decades to happen. And it's going to go up regardless of what's happening in other markets. And that's what's kind of special about Bitcoin. It is uncorrelated as a growth story to everything else in every other asset class. That probably is due to selection bias in indices because they always go up because they only have the winners and the losers get relegated to Division 2, if you want a football reference. But, Bitcoin doesn't have that. Bitcoin is the surviving asset. There is no survivorship bias in Bitcoin. So it going up is better than looking at indices that go up over time. I think it's a bit of a false comparison. So I'd say the first order effects is that you would probably see, on balance, a better reaction for Bitcoin price with the Republicans winning versus the Democrats. But it's very unclear what the second order effects of that would be. And that's something that we can't really know in advance and obviously can't even know in hindsight because you only have one version of history and can't tell which would be better. Which party to have in power would be better. So it's a really tough one. I think there are good things that happen. I think, sort of the predilection of Trump and that clan to sort of pile into scammy things in the crypto space and kind of promote those things and meme coins and obviously like a lighter touch. And I think you'll probably see like a big explosion of crypto gambling and sort of crypto taking its rightful place next to FanDuel and DraftKings and Vegas and Macau, and probably be sort of allowed to flourish in that way under a Republican administration. And, that is interesting because it lets Bitcoin sort of be protected by this outer layer of crypto activity that will be sort of given a wider berth to function. But also crypto competes with Bitcoin for marketing exposure and sort of top of funnel and has a history, a long sordid history of fooling people into buying these shiny, scammy objects instead of Bitcoin. So it's typically been pretty bad for Bitcoin. So it kind of works in both directions. And sort of the Democrats coming into power, I would say would roughly be the opposite of that. It would be kind of like better for the distinction of Bitcoin versus crypto, but probably overall, at least while they're in power, sort of negative for banking relationships for Bitcoin and for crypto, and potentially some onerous regulations with regards to how the fiat system connects to Bitcoin.
One key reason Ethereum has struggled to outperform other assets in the second half of 2024 is a decrease in market liquidity. August's monthly report from Kitco, a digital asset data and index provider, highlights that the 5% market depth on Ethereum trading pairs has significantly dropped on centralized exchanges since peaking in June 2024. The 5% market depth is an indicator to identify buy and sell orders with 5% of the mid-market price. It allows to measure liquidity around and whether it can be sold or bought near to market prices. A higher 5% market depth indicates strong liquidity and low slippage. With Ethereum, spot ETF were expected to improve and have a positive effect on this metric, but that hasn't been the case as observed in the chart. Therefore, Ethereum price has struggled to regain bullish momentum unless retail interest and volumes return to Ethereum. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.